Hey everybody, welcome back to another episode of Map Money. So today we're going to be talking about the entirety of the portfolio, which might be split up into 2 to 3 different videos just based off of feedback from you guys requesting and saying that the videos where I review the portfolio end up being quite long. And you're right, they're anywhere between 30 minutes to an hour. And so what I'm trying to do is split it up into thirds. So if you kind of get into one particular part of it, you can watch that depending on what kind of interests you. So the first part is probably going to be M1 Finance and Robinhood. The second part is probably going to be the real estate aspect of the portfolio. And then the third is going to be the individual brokerage account and individual retirement account so that you guys can watch. So today we're going to be talking about the M1 Finance and Robinhood, which is relatively small in comparison to the entirety of the portfolio, but it's generally specialized on YouTube. A lot of people really like Robinhood and M1 Finance, so I'm going to hop into that first. It's about $10,000 of this $416,000 portfolio. So that being said, it's about 2.5% of the portfolio. So basically what I wanted to cover is where we are in grand macroeconomic trends of what we're kind of looking at here. So we're down about 13% year to date and probably about 15 to 16% from all-time highs. So we entered the year at about 3,300 on the S&P 500. Actually, it was about 3,250 on the S&P. And we ended up climbing closer to 3380 or 3390 on the S&P 500, and it actually dipped down to the 2200s more recently in the past month or so. So since then, we've climbed about 600 points on the S&P 500, or if you're looking at SPY, about 600 points. 60 points on the SPY, which is a pretty big increase, almost a 30% increase from where it was at all-time lows, but it's still about 15% down from all-time highs. So just to give you guys a brief understanding of where we are in this part of the portfolio. Now, before I kind of jump into the Robinhood aspect of things, I wanted to cover with you guys that only 27% of you guys watching this video are probably subscribed to the channel. So before I jump into Robinhood and M1 Finance, if you guys find yourself watching my videos a couple times or have watched, or this is your second or third time watching the videos and you enjoy the content, make sure to hit the subscribe button so that you guys can be notified in the future and it shows up on your, I guess, feed roll every time you're looking for new videos. So hopping actually into the Robinhood aspect of the portfolio, it's the smaller of the two between Robinhood and M1 Finance. It's around $2,000. I try to fund this with about $250 twice a month. So on the first of the month, in the middle of the month, I put $250 into this. And that's just to kind of show you guys how to basically continue to contribute to a specific portfolio and how it can develop over time. Now, I started this off, I think, a couple months ago. I think at the beginning of the year, probably January timeframe, at about $40 in here, and it was just basically me trying out Robinhood, and I kind of just let it sit idle as Fidelity really took over the majority of my investing strategy. A lot of people really enjoy Robinhood though, so I figured I would have a sector of this on the channel so people can relate to it and also see what's going on. But I notice a lot of people starting to move out of Robinhood, especially as of the larger brokers kind of going to zero commissions and having a full service brokerage where Robinhood is making you wait in lines for something as simple as giving you interest on the cash that you have in Robinhood. And believe it or not, I actually just after having my account now probably here for 5 to 6 years, just started getting interest on my cash. And to keep in mind, like, I never had to apply for cash interest or interest on my cash and say Fidelity or anything else like that. So it's a little bit interesting to see how they kind of do things. But anyway, and they don't offer fractional shares. But anyway, moving on to what's actually in here. So we generally house GM, Royal Dutch Shell, Southern Company, and then I have some shares that some folks who had just recently signed up with Robinhood using my link in the description actually got me. So I appreciate you guys signing up. I think one was Anthony, and I forget the other gentleman's name. So both of you, thank you. And there was a third as well that signed up. So if you guys are interested, hit the link in the description below, and you can get yourself a free stock up to like 500 or 600 bucks. I think it actually might be over $1,000 if you get lucky. So appreciate everyone that uses that link. But going back into what specifically is in here, I'm actually missing a position because I just sold Kinder Morgan. It was a one share position, and I actually have Kinder Morgan in my individual brokerage account. So I said, why would I have it in two different places? But before we kind of jump into it, this compared to the S&P 500, we're actually doing better at the moment, and that's because I've been investing through the cycle rather than strictly having the S&P 500 just since January and beyond. And what I mean by that is, as the stock prices have kind of come down, I've been continuing to add my $250 every 2 weeks or so, where I'm able to buy GM, Royal Dutch Shell, and Southern Company at depressed prices. And so as some of these stocks have continued to rebound, I've been able to trim off that, I guess, 15% from all-time highs down to about 8%. So yes, I'm still down on some of the positions that I had bought back in January, February timeframe. But as we've continued to invest throughout the entirety of March and beginning of April and middle of April, we've accumulated more shares that has kind of gained up and actually have a realized gain on some of those positions. So it's relatively small, 20 shares of GM, 9 shares of Royal Dutch Shell, and 19 shares of Southern Company. So Southern Company is actually the biggest part of the portfolio in Robinhood. It's about 50 odd percent, so 60% of the Robinhood portfolio is actually in Southern Company. And this is because I don't have a lot of utilities throughout the entirety of the portfolio, and so I really wanted to have somewhere that I can buy Southern Company. So as things go on, I'm actually going to sell these 2 shares here and probably use that to purchase a little bit more Southern Company. So in about 5 or 6 days or so, I'll get another 250 bucks because I always put 250 bucks in on the first of the month. So when that comes in, I'll probably continue to purchase and spread the money between those 3 shares, the GM, Royal Dutch Shell, and Southern Company. Although I have thought about just taking the money in Royal Dutch Shell and using it to buy more Southern Company and GM, just based off the fact that I have Royal Dutch Shell in my individual brokerage account as well. So actually going to the larger of the 2 portfolios, an M1 Finance, it's about $8,500. I use the same philosophy, $250 twice a month, so the first and the middle of every month. So between these 2, they're getting about $1,000 every single month between the 2, and so this one was relatively newer. I actually funded the account with about $5,000 in third quarter of 2019 timeframe, and so you can see we're doing relatively well over time. So we started about the 5,000, 5,500 or so, and now we're kind of growing the portfolio up about 80% or so in terms of value. But in terms of what I've actually invested and what we're up, we're only about $260 up or so, and some of that is from dividends and some of that is from actual value gains. I've actually thought about I started the portfolio here with Johnson & Johnson and 3M only, and then more recently added Visa, as I wanted to add Visa to the portfolio. It had been something that I invested in back in 2016 or so, and unfortunately, due to tax reasons, I had to sell my Visa position because it was in a Roth, and I don't really want to get into that too much. But one of the things that I'm actually going to change up is, originally this was 50-50 Johnson & Johnson 3M. Then I added Visa, so I made it 33, 33, 33 between the 3. And now what I've decided to do is actually add the NASDAQ Biotechnology and QQQ for just NASDAQ top 100 shares as a whole into the portfolio. And the reason being is because I don't have a lot of ETF exposure, and I think it'll be nice to have these to kind of complement and continue on a twice a month basis, add additional capital. So I think for the time being, what will end up happening is it'll be $125 every time it invests, because these are currently over allocated. So I'm going to keep these 3 positions here to 50% of the portfolio, with 3M being only at 10% and the other 2 being at the 20% to make up the entirety 50%. And then these are going to be 25%, 25%. And reason being is because I just want to get these up to value a little bit quicker. So hopefully this will be about $250 every single month for each of these for the time being. And just really want to keep this going, and really over the next couple months get a decent position in these to the point where they could be 3,000 or so dollars, just like we have in Visa and Johnson and Johnson. Johnson and Johnson 3M are also invested in other parts of the portfolio as well, so I know these guys show up quite a bit, and so. I don't really want to rebalance or anything like that in from 3M to any of these at the moment. I'm just going to collect the dividends and use those dividends to invest into the biotechnology and NASDAQ 100. And so nothing too bad associated with that. But keep in mind where we are here. I mean, if you just look at the last quarter or so compared to where we are, we're very similar in terms of where we were with Robinhood. So even though over the past quarter or almost year to date, rather, things are down 13 to 15%, depending on where exactly you're looking. Here in the M1 Finance portfolio, you're only down 8.22%. And I think that's due to the same reasons why the Robinhood portfolio is down, because I'm adding $500, 250 twice a month, beginning of the month, middle of the month, and so we're investing through the cycle. So we're removing and actually removing some of that loss in returns. And granted, some of the shares that were obviously bought are down the 15 to 13% probably. You can see that Visa and 3M are actually down 15 to 30%. But some of the more recent positions that I've added are actually up, right? So I was buying Visa at $130. Now it's currently up, sitting $130 a share. Now it's currently sitting at 167. So you can see that some of these positions are being dragged down. So the positions here used to be up in the 190 range per share, and now that we're kind of adding at these lower prices, the 130s, the 160s, this average share price is actually being dragged down. So that's actually lowering the cost basis of each position and allowing me to, I guess, recuperate some of those losses. And so, same thing with Johnson and Johnson. I think, initiated my position at about 120 or so, and actually, the Johnson Johnson's done relatively well over the past little bit. So you can see it did drop down a little bit, but then it recovered pretty substantially, and that's just partly because we're adding funds throughout. So relatively cool to see. Definitely can't complain. I wish I had bought a little bit more Johnson and Johnson when it was down a little bit, but I thought there was other bargains out there as well. So really curious to see how this biotechnology and QQQ get added in here, and really curious to see if this continues to kind of grow. I really do enjoy M1 Finance kind of allowing you to do the auto invest aspect of things. I can't really do it all too much in Fidelity, although I can do direct deposits. It doesn't do automatic investing 100%, although you can do like motifs and stuff like that in Fidelity that you can't really do here. But once again, yeah, I'll be continuing to add about $1,000 a month to both of these. 250 in the beginning for both Robinhood and M1 Finance, and then in the middle of the month adding another 250 to each. So 500 in total in the first of the month, and 500 in total on the 15th, 16th of every month. That I'm generally, for M1, obviously it's automatically reinvested into these stocks that you can see here. But for the time being, obviously, we're going to focus on the NASDAQ and QQQ and Southern Company and the Robinhood aspect of the portfolio. So that was a relatively quick rundown, specifically looking at Robinhood and M1 Finance. And if you guys are interested, I'll be doing a one on real estate relatively soon, whether that's later tonight and hopefully releasing it tomorrow or maybe the next day, or yeah, and then I'll also be doing one for individual brokerage account and IRA as well. So hopefully this guys finds you guys good, finds you guys well. If you're interested in signing up for M1 Finance, just like Robinhood, that link will also be in the description below, where you can look at the pie specifically if it interests you. And yeah, that'll be pretty much it. I will see you guys on the next video. Cheers.